Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning and happy Wednesday, 16th of November 2022. Retail sales data, pretty solid this morning, up 1.3% versus 1% expected. California outspent other states, probably due in part to their state inflation stimulus checks, which makes a ton of sense and a very California thing to do. This does give pause on the inflation declining narrative. Because of the services piece, restaurants up 1.6% in October versus up 0.9% in September. People continue to spend money. Services, I think, is a big home for that spending right now, and relative to goods. Not what you really want to see. Target down 14% this morning on another bloated inventory. Slow consumer spending, discounting, warning for the holidays, whatever, just a mess. Services is where the money is largely going, it would appear. Very contrary signals. October very weak for Target, that highlighted it specifically, yet retail sales up solidly according to national data. If you're a hedge fund, long Walmart, short Target would have been the move. Hold on one second, I've got to adjust my audio. There we go. Micron, another one. Pre-announcing reducing DRAM NAND wafer starts by 20% sequentially, working towards additional CapEx cuts. There's still too much inventory out there. Numbers are not done going down for semis. Stock's only down 2% last I checked. Let's see, Micron down 2.5%. You've heard us. We've been talked about semi capital. Thought real hard about getting on the train. Before, not too long after it started getting going, we realized we missed it for the current run. Lam Research today looking down 4%. Rest of Semi Capital looking down as well. In fact, we actually did some trimming. We've been trimming Air Test, AEHR. Told you about that one. That thing's up. We're up over 100% on that one. So trimming that into strength the past couple days. That's been our approach. I think that is the prudent move. The SMH hit its head on the 200-day moving average yesterday. We'll see what happens after this news. See what happens with NVIDIA tonight. It'll be very interesting to see if it can make its way above that 200-day for any kind of stretch. I'm highly skeptical, but we will see. Energy continues to act heavy also. Just seems like it goes down every chance it gets. Keep an eye on 90 crude. That is sort of the thought and the level. That's where Saudi defends 90 Brent, not WTI, 90 Brent. We will see it's 92 right now, so going to probably retest that 90 level. And that's maybe kind of our thought here. Maybe crude and energy does make a good move lower before it makes another pronounced run higher, in line with more China reopening, in line with Fed pivot, that kind of stuff. But that's not happening yet. So that's it. Have an awesome day. Talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.